planning webinar. My name is Dan Bahe, and I am the Precision Business Planning Specialist here at AgSolver. And in today's webinar, we're going to be reviewing creating 2017 cash flow analysis scenario. So what we're going to be doing today and over the next 3 or 4 weeks is precision business planning on a particular field. It's a 110-acre field. It has some variability across the field, but relatively it's an extremely productive field. It just has its certain issues. And so today we'll go over our introduction and then create our 2017 corn planting scenario, import and create a 2017 corn crop budget, and then review our 2017 expected financial performance, and then we'll follow up with any questions anyone might have. And so, but I do want to mention that we are in Q&A mode for this webinar, so if you do have any questions, please type your question in the chat box below my contact information, and I will answer your questions throughout the webinar as they come up. So we will close that and go to the particular field. So here we're working out of the Dan Bahe Farms enterprise, and the field that we'll be precision business planning on is the county line south field. And so this field is in corn and soybean rotation. We only have 2 years worth of data on this field, but the data that we do have is yield and planting data. And so in 2017, this field is actually going to corn production. And that's really where we'll start today. And so we're actually going to create a scenario, and we're going to name this scenario 2017 corn production. We're going to have a scenario type as planning, and we have actually 3 different scenario types. So we have our actual scenario. This is reviewing previous years, financial performance, and then we have a planning scenario. Planning scenarios are scenarios that we're looking to potentially implement or seeing and projecting the financial performance. And then finally we have an implemented scenario. So say we actually implemented that planning scenario, then they get switched over to implemented. And so, but for this case, we're going to have our Ritchie corn 2015. And so we'll check mark that box. And then we'll come down and click save. So now we are going to import and create a crop budget template. So up at the top of the copy budget template list, we have crop budgets for 2015, and why they're correlating back to 2015 is because the system is recognizing that we have a field in Iowa, so hence we have the Iowa crop budgets, and we have yield data for corn based off of 2015 corn yield data. And so we'll just start with the 2015 corn after soybeans data, and then we're going to adjust the crop budget to represent today's commodity prices as well as today's input prices that we already have spent on this field, because we want to get a baseline or a starting point for our actual or for our planning scenario. So commodity price, we're projecting a fall or an average cash commodity price right around $3.40 is our starting point. So we'll put in $3.40. Other revenue, this is where we could add an insurance payment, projected ARC, PLC payment, conservation payment, anything like that. We're not going to add any other revenue at this stage in the game. And so then we'll come down and we have our equipment costs. And what I'm going to do is first delete all of these subcategories that I don't need. So don't have irrigation, don't have other. Our tractor is factored into our operations. We're in no-till, so we don't have any tillage costs. And so for the combine, what we have is a cost per acre of $26. And so we factored all of our operational costs up ahead of time based off of the payments that we have left, depreciation, interest, all of that. So, and also repairs are also factored into that. So to run the combine, it's $26. Grain cart, that's actually at $12. Planter is at $24. Sprayer, that's at $16 for 3 passes. And then we'll add a subcategory of other, and we'll call this anhydrous application. And that's at $14. So with a total cost of right around $90 an acre. On the seed side for this particular field, based off the hybrids that I'm projected to plant, that's at actually $113 an acre. And then once we implement and plant this field, then we'll bring in our planting data, our as-applied planting data, and then we'll have all of the hybrids listed out. And then we put a cost per hybrid or cost per thousandth of seeds planted. Fertilizer cost, that's actually around $122 an acre based off dry spreads and hydrous application, and then also UAN and a little starter on the planter. Herbicide and insecticide, we're going to come down and create subcategories. So for pre-emergence, that cost, looking at my notes, is going to be right around $23.80. And then for post-emergence, that cost is going to be $26.42. And then on this field, we're going to be doing a fungicide. And that is at $18 even. So, and then after that, we have our crop insurance. We have 85% revenue protection, so that comes to a cost of $22.36 an acre. Interest, our interest is actually $32 an acre. Grain drying and handling and hauling, I'm going to delete these subcategories because we're having an expected drying and handling cost of, we just do a flat rate of projected cost of $35 an acre. This is a cash rented field, $280, labor, $15, overhead home personal at, put in $20. No custom hire, and then no other costs. We'll go ahead and click Save. So now the worker is putting this together, and if we produce on this 108 tillable acres, if we produce 215 bushel, we're going to actually potentially lose right around $66.50 an acre, with a return on investment of negative 8.3%. Production efficiency, this is measuring bushels produced per $1,000 spent. So we produced just shy of 270 bushels per $1,000 spent. And we'll look at this field and we're going to start brainstorming ways how we can improve production efficiency by 30 or 50 bushels per $1,000 spent. Sometimes it's shifting working capital around. Acreage opportunity ratio, 85%. So 85% of the field is either operating or expected to operate against either a break-even or expected negative return. Working capital, we're looking at spending roughly right around $73,000 on this field where we're not receiving a single cent of profit. But for me right now, what I'm most concerned about is this break-even commodity price at $371. So maybe if we do have a little market rally, we know our exact break-even commodity price, and we can take advantage when we do have a little market rally or get close to that. Also, we have our total field expenses, total field revenue, and then finally total field profit on this particular field. And then just to the right, we have our field performance table with the soil type, and if we hover over the soil type, you can see the soil type name with that area within the field, yield per soil type, profit per soil type, return on investment, production efficiency, and break-even commodity price per soil type. We can also look at our inputs and see that 35% of our budget is going to land, 14% is going to seed, 15% is going to fertilizer. We hop over and look at our soil data bank. This is correlating back to the 2015, so the county average yields for both corn and soybeans, along with organic matter and CSR2 value. So if we want to look at the different types of maps that we have within the application, here we're looking at a profitability map. We can also look at our expected yield map, return on investment map. In this field, there's a couple different issues going on within it. So in the northeast corner, we have a tree shading issue along with turkey and deer eating the crop. And the same thing in the extreme northeast corner, right inside the driveway here, we have an extreme compaction problem. In the northwest corner, we have a water management problem. And down here, south of the waterway, this is where there's a broken main, so we need to repair that. And so there's our return on investment map. We can also look at our yield increase to break even. After that, we have our break-even commodity price map. You can see and filter about 25% of the field. We need $3.50 corn to break even. 58%. We need $4 corn to break even. $4.50 corn, 10%, and $5 corn at 60%. And so what I need to do is cut out this waterway. And so we'll also have our break-even or expense decrease to break-even map. So the amount of input dollars we need to cut to break even. Then I would like to review our production efficiency map, that bushels produced per $1,000 spent. Field boundary, as well as the soils overview map. So this field, it doesn't have much going on in terms of soil type issues. Have about 3 main soil types within the field. So if we hop back to profitability map, and this is the baseline or starting point, and then we'll mock up and create scenarios based off of precision business planning where we take care of the issues in the northeast corner and the northwest corner. And what we might do is also create a variable rate planting map. And so maybe we don't need 38,000 seeds on this field. Maybe we can drop planting populations down to 30, 33, 34. Granted, we may give up a little yield potentially, but at least this gives us a starting point. And then the final report that I like to run, and we'll click on Create Report. We'll come down to the scenario level, and on this we'll click on Find Our Field, so County Line South, 2017 corn production, 2015 planning. And then I'm just going to run a simple field report card and return ratio report. So return ratio is measuring and shows it's a graph that compares profitability per acre to acreage amount. So this will be combined into one report. So we'll go ahead and click print. So now our report is being processed. And so overall, this field is very productive. It just has a few things going on within the field that we can improve financial performance. So our report is already back. So it's loading here. So first we have our field report card, which has our expected financial performance table, as well as our projected yield map, our profitability map, return on investment, yield increase to break even, and expense decrease to break even. So we'll create another report that has our return ratio. So here's our return ratio. So this has the acres on the left-hand side and then the profitability per acre. It gives us a nice graph grouping the acres with the weighted total averages. So in next week's webinar, what we'll first tackle is the water management issue in the northwest corner on how we can improve profitability. And then the following week, we'll tackle the issue in the northeast corner. And then after we tackle those two main issues within the field, then we'll dive in and start looking at ways how to reduce overall inputs to get us to close to break even or into profitability. And what we might do, we'll also look at the cash commodity prices for October, November, December delivery in 2017 to see how we fare and see if we can put together a marketing game plan for this particular field. So now I'd like to open the floor up for any questions anyone might have regarding this initial financial projection scenario. Really, it's just getting our baseline so we have something to compare to once we create a planning scenario based off of precision business planning, so we can compare if we do nothing versus if we actually implement these precision business plans on this particular field. And I also want to mention, if you are viewing this webinar on YouTube and you have any questions, please feel free to contact either myself or the support team at AgSolver. My email address is bjbahe@agsolver.com, or you can contact our support team at support@agsolver.com, or you can call me on my cell phone, That number is 319-238-1978. If you have any questions, and if you're close enough, I can come and visit you, or we can set up a one-on-one webinar to work through your enterprise and create scenarios on your individual fields. And so if there is no questions, I want to thank you for viewing our March 22nd Intermediate Planning webinar, creating 2017 cash flow analysis scenario. And if you're in the field, please be safe. Thank you.